Four years ago, a member of the Biz News tribe decided that he wanted to finally, forever, sort out this local is lacquer versus offshore is better argument. So he selected the two people who epitomized the offshore versus the local challenge, gave them each 500,000 Rand and said, here's the money, that's my money, but I want you to make me the best possible return. We are 4 years exactly into that challenge, or well, we were earlier this month. And Piet Viljoen, who was off to a flying start with the local is lacquer side of it, the South African portfolio, is still comfortably ahead. Magnus Heystek was left in the starting stalls when we jumped 4 years ago, and he was coming up very strongly, and then I think the Rand has kind of put a spoke in his wheel. But there is a year to go. So we're going to find out from the guys how they've performed so far and what they expect for the next 12 months. So just to give you the numbers, Magnus is sitting on $35,197. At the current exchange rate of 17.51, that's 616,000 Rand. Piet, who's only been in Rands, is at 681,000 Rand, which is about 65,000 in front. So you're the leader, Piet. You took lead from the start. You did a Zola Bud on Magnus, and you've kind of continued to stretch your stride. Just tell us what brought you here. What was your best bet?
There have been a number of good bets, but I think it's generally been good South African businesses that were massively undervalued 4 years ago and remain undervalued to this day. So it's a mix of them. It's hard to single out, but I think the banks have done fine given the muted backdrop in credit growth. Despite that, they've done fine. Local industrial companies like CMH have done fantastically. There are a number of businesses like that. So it's hard to pinpoint one thing. As a general trend, businesses that have survived the past 10 or 15 years in South Africa are strong businesses with good management on average. And these companies are grinding away, generating returns for shareholders, and those returns are not recognized by the market yet. They're starting to get recognized, but they are not recognized by the market yet. The generalization is good South African businesses with good management have grinded away and generated good returns for shareholders over the past 4 years.
So it almost sounds like they've been tacking into the wind. They've had a strong wind into their faces.
Yes.
Things have not been easy. And that means to have even, I suppose, stayed alive during this circumstance, let alone thrive as some have. You needed to really get your game together.
Yeah, it's been a very, very selective Darwinian process that's happened in South Africa, and the survivors are strong, and they are doing well. And this headwind that they have faced has not only been business headwind. There has been within South Africa. We have been so pessimistic about our country, and the lure of offshore has been so strong that the capital available to local companies has just disappeared. There has been no or very little capital available to local business to grow or expand, because every South African wants to take their money, his or her money, offshore and not invest in local economy. And that is manifested in very low share prices for local business. That was my mantra 4 and 5 years ago, and that remains my mantra today. The available amount of capital for local businesses is it's like nothing. And that means that their share prices are depressed, and they have to use the available capital that they have very wisely and generate good returns on that, because that's the only form of capital they can get to invest into their businesses.
Cody from Paul has sold multiple vehicles to We Buy Cars. Suspicious? I think so.
Is that a crime?
No. Where are you getting the cars?
I buy them and I sell them at the spot like a normal person.
Okay.
No, man, I'm just an accounting student. I know a good deal when I see one.
That's Excel meant. What's more stressful, tax season or selling a car at We Buy Cars?
Tax season, obviously.
We Buy Cars, the easiest way to sell your car by far.
It makes a lot of sense what you said. Magnus, I'm sure you wish that this competition had started 15 years ago. It was 15 years ago. You were Manalian. You were the sole voice of take your money offshore. And my goodness, those who followed you then, it hasn't been as good in the last 4 years, as we've seen from the portfolio so far. You are still lagging. But at that point in time, you were spot on. I suppose the big story is you've managed to turn around from a dreadful start. I mean, you couldn't have started at a worse time. Well, this competition couldn't have started at a worse time for you. But what's happened over the past 6 months? Because you were getting up to Piet, you're getting so close, and now he seems to have put distance between you again.
Yeah, good morning, Alec, and good morning, Piet. You know, there's so many issues one can discuss, and you know, so many variables. And it's a very interesting competition, and timing is one, as you point out. If we had started this competition 6 months later, totally different picture. But this is money in the market, and you have to live with what you get. Secondly, I've learned, and I've said this before, maybe I'm a better advisor than a fund manager. I'm maybe leave the money to the fund managers. They do it for a living. I'm a better advisor. I can, but there's this emotional component of managing money that I perhaps failed. I panicked when the market went down, and I thought I'll go into cash. And then while I was having a cup of tea, the market went up 10%, and then you're 10% behind the market, and that's just what happened. So I settled down. I chose my stocks, and they're running very, very nicely now. And in my portfolio, I've got funds like Randmore, which I need to point out has been a superb performer, has beaten everything in the world just about. So, and this is the lesson investors need to make. Don't be smarter than your fund manager. Don't try and be smarter than the market, and let time and your choice of funds do the work for you. But the point that Piet is making is extremely valid. You must remember, 4 years ago when this competition started, South Africa politically and economically was staring into the abyss. There's no question about it. With the damage that the ANC had done, the ratings agencies, the world economists, and everybody was just pulling money out. Not only South Africans, the foreigners were pulling money out of South Africa at a tremendous pace. And there's no question about it. There was much risk attached to South Africa, which has diminished over time. I think I sent you a little piece this morning. Since the GNU, plus a bit of luck. Luck counts in this game, like in a rugby game or in a golf game. We had the spectacular rally in the commodities and gold, which has boosted our market tremendously. Plus, we had Naspers process, which has just also lifted our market. So our market has made a remarkable recovery. People who've stuck to the JSE, and a lot of fund managers had to stick with the JSE, they're now looking fantastic. Quite rightly so. And it's a great time to be saying this. We are now busy repairing the damage to the balance sheets of companies, of individuals, of funds, because up to 22, there was no competition. It was all offshore, and it was in the results. Piet correctly identified, and he said, look, SA is very, very cheap. He said it at many conferences at Business, and he's been proven correct. However, one must not exclude the risk that was always built into this return. It could have fallen apart. The GNU, if it had broken apart, the results would have been totally different today. So here we are on a 4-year basis. Peter's leading very nicely, deservedly. I'm trotting along with my funds, with my Randmores and my tech funds. I'm doing very well in dollar terms. The currency plays a factor, and that's what investors need to understand. You know, the currency has made a remarkable recovery since April this year, in the sense that the dollar has weakened spectacularly, 9%, the sharpest drop in 40 years. So we're benefiting from the currency. So anybody who takes money offshore needs to know the currency is a factor in your life going forward forever. Right now, we have markets very well, finely poised, and there's danger in the offshore market. The AI stocks seem to be coming off, the technology stock coming off. Everything seems to be in South Africa's favor. Grey listing, credit upgrades, the market is running. It's going to be a very exciting 12 months, and see what happens, how markets turn out.
Yeah, I suppose you've made the point that the silent third player here is the rand, because you have to convert your returns, Magnus, into rands, and if the rand's down, if the rand is 10% stronger, that means you back 10%, and you take 10% off 600,000. Well, had the rand just stayed where it was, this would have been short heads in it between the two of you, but the rand has actually played in your favor. But I guess, Piet, from your perspective, would you then say that the rand was undervalued anyway and was bound to come back?
I think that was an important part of my investment thesis at the time, was that the rand was significantly undervalued and remains undervalued to this day. Even at 17 to the dollar, it remains undervalued. I think, if we can just invert that, I think the dollar is a massively overvalued currency. And I think that is the problem that faces offshore investors right now. The dollar is massively overvalued. The rand against other currencies is not that undervalued. I mean, I always love saying this. I went to Japan 6 years ago, just before COVID, and today the rand is about 20% stronger against the yen than it was 6 years ago. So the rand is not this like currency that is always weak and just a bad currency. There are other currencies, the Korean won, the Japanese yen, the Aussie dollar. Over the past 10 years, the rand has flatlined against Aussie dollar. There's been no depreciation at all against Aussie dollar. So the rand isn't such a runt as people like to call it. It actually holds its own. And if you then take into account our interest rates of, say, around 10%, versus other countries like Australia's interest rates of 3-4%, Japan, just about nothing, keeping your money in the country, in South Africa, in, say, a bank account, which is earning you 7 to 10%, or government bonds, which is earning 7 to 10%, you're better off than taking your money offshore and putting it into dollars, Australian or US, of the US variety, or yen, with interest rates are 2 or 3 or 0%. So on that carry, you're earning extra on top of the undervalued currency. Having said that, I mean, the point Magnus made just now is extremely valid. 4 years ago, I thought South Africa was undervalued and the rand was undervalued and interest rates were very high, so things pointed to good returns. But those returns came because of the highly perceived risk levels in this country at the time. And a lot of that risk is still there. And remember, at that time, anything could have happened. We could have blown out. We could have collapsed. The ANC could have stolen even more money, if that's possible. So anything could have happened, which I guess just points to the type of argument we should have is not an either-or argument. It is, here's an opportunity. If your neutral weight is 0, at least allocate some to it. Or if your neutral weight is 50%, allocate 60% to it, or whatever the case may be, is an opportunity to go overweight an undervalued asset. Would you put all your money into that? No, I wouldn't. Would I put all my money into where else is undervalued at the moment? I think China is very undervalued. Would I put all my money into China? I wouldn't, although I do think that it's massively undervalued. I wouldn't put all my money in there because what happens going forward is independent of what has happened in the past. So you can't extrapolate past returns, bad ones or good ones. What happens going forward is, what happens. And when there's risk out there, funny things can happen. As it happens over the past 4 years, things have turned out well in South Africa. And in fact, right now, I think we're poised for fantastic returns. I mean, given the fact that we've gone off the grey list, given the fact that our credit rating has been upgraded and still with a positive outlook, given the fact due to the commodities, platinum and gold going up so much, our budget seems to be under control, the government's deficit is under control, the debt levels are not spiraling out of control. These are all fears people had 4 years ago, and they're all moving in the right direction. And the key right now is that interest rates are 300 basis points, 3% lower than they were 4 years ago. The cost of capital for businesses, 3% lower, and that makes a massive difference to the present value of future cash flows. And that has not been reflected in the equity values to any extent yet. So I think, I was optimistic 4 years ago, but risk levels were a lot higher. Today, I think risk levels are a lot lower and fundamentals are a lot better, and the stocks are still cheap. So I'm very excited.
I spent Wednesday in lockup at Parliament and gave a very upbeat analysis of the MTBPS, or what we used to call the mini budget. And part of that was due to the press conference. Two things jumped out at me. So what happens at the lockup is that you get all the documentation, you get to read it from 5:30 in the morning. And then you have a press conference between 11:30 and 12:30, and then you're not allowed to do anything until the minister starts speaking at 2:00. Then the embargo is broken. And in that press conference, it's really interesting because you're having the first bite, if you like, at these people who've spent months putting together their budgets and the massive documents and so on. And there were two things that jumped out. The one was Duncan Peterson, the Director General of Finance, saying that we have saved 5 billion rand on interest payments because of the improved interest rate in the past year. 5 billion rand. Well, in this fiscal year. Now that might not sound like a lot when you're running a 1 trillion rand budget, but 5 billion rand's a lot of money to anybody, and it gives more capacity there. And he was saying, were interest rates to just stay where they are now, there's another 20 billion where that came from in the next couple of years. And the other thing was when Lesetja Kganyago, the Reserve Bank governor, said we are going to have a 3% inflation target rather than 3 to 6%. And he explained that idea is to make South Africa a low inflation destination. And as a consequence of that, it will help the currency. And we've, as mentioned earlier, if the currency is stronger, that means we pay less in interest, and that means the country has got more money to invest in productive things. That 3% inflation target it's kind of esoteric, and economists look at it. But let's just imagine that they get it right. Let's imagine that our inflation does come down to 3 or below. Presumably, that would enhance your prospects, Piet, from your perspective, because the rand would be firmer, and that silent partner in this whole activity would be sitting at, who knows, in a year's time, 16 Rand 50, and you will definitely win if it's 16 Rand 50. If it blows out to 19 Rand 50, Magnus will definitely win. So it's almost like at the moment it's a Rand play that we're looking at. Having a look at all of that, which I've mentioned now, and all the background, where are you seeing, the two of you, the Rand in the next year? Because this is going to determine whether you win or lose this competition. Piet, starting with you.
Look, I don't know. I think the odds favor the Rand being stronger against the US dollar than it is now, not because the Rand is a strong currency or this, that, the other. It's just I think the dollar is overvalued and might weaken going forward. So I think, if anything, on a trade-weighted basis against all currencies, I think the Rand has a good chance of being stronger. Possibly not significantly stronger, but somewhat stronger. And I think the opportunity here is if we can stick to our 3%, it's a longer term opportunity. It's not like a 1 year opportunity, but if it's a longer term, if we can stick to a 3% inflation rate, there's no reason why our interest rates have to be, government bond yields have to be 10%. And our prime rate or our bank rate has to be 7%. They could be, both of those could be significantly lower, which even further lowers the cost of capital for South African businesses, which, again, on a discounted cash flow basis, massively increases the present value of those future cash flows. So the opportunity is in SA Inc. if they stick to that target over the long term.
So the rational play then, ignoring all emotion, is that the Rand will be firmer, which will help the economy. Magnus, I know you've been coughing and sitting on the sidelines and thinking, I need to get at this. Come on, what's your thought on both of those issues?
As I said earlier, the key lies in the US dollar. It doesn't lie in the rand. It's the US dollar, what Trump is going to do and what he has done, and the tariffs, how that plays out. And already picking up articles from Bloomberg and from various other people like John Malden and John Authors, etc., that the current phase of dollar weakness is coming to an end, and that there's already a reversal in that trend, very slight, but there seems to be a feeling, don't expect the dollar to keep on declining as much as it has. It has benefited a lot of people, but there seems to be a cycle. And we know that, Alec, you, I, and Piet, together, we've been in this business for about 100 years together. These cycles come and go, and you must watch the big cycles. Yes, the rand has been surprisingly strong. Will it go down to 13.50 as our mutual has been forecasting for a long time? No, I don't see that happening. 16.50 is doable. Investec thinks it's doable, but that's just a variable. And I need to stress, when we advise clients to take money offshore, and we did this day one, and we said, guys, the minute you convert from rands to dollars, do not look back at the rand or what it could have done. You are buying dollar assets from now on, and you measure your asset returns in dollars going forward. And that has been a very good strategy. And we actually have told a lot of people, if you can't live with the volatility that comes with the advice we give you, we will look for other alternatives. And we've been very, very, very firm. We put it in writing. You may recall at the business conference beginning of last year, I had a photograph of Peter Lynch where I said, are things getting better or getting worse for South Africa? And I said, I think there are tentative signs that things are getting better. But I am very surprised, pleasantly surprised, how well the economic cards are falling at the moment, with a grey listing, with the upgrades, with the gold boom, which has been incredible. Bearing in mind, we have got one gold fund left in South Africa, and they wanted to close it 3 years ago. Even the big institutions did not see this gold bull market coming. They wanted to close the fund, and that's just another story. The rand going forward, I wouldn't be surprised if it's going to end around about where it is right now. So it's going to depend on domestic growth, where you have invested your money. And now the choice of funds and categories and themes becomes very important. You stick with the technology theme, which has been phenomenal for a very, very long time. You put money in China. Japan has been great. That's all the complications of offshore investing. And as I said earlier, my view now is I give it to experienced fund managers like Sean Pichet and other guys, and they must run with it. And we live with the consequences. Sorry, Pete, sorry. you interrupted me there. I was coming to your cockroach portfolio.
A little bit of trash talk there, no problem at all. Okay, so we got the Trump bump, which Magnus is talking about now, where it's enough now for the dollar, and he's going to then give it a push because they got a year to go until their midterms, against the Euphoria, GN Euphoria. Isn't that cute? So that Euphoria, can it last? And on both sides, and in fact, is it real? So Magnus, I think let's start with you. Rob Hersov continues to say South Africa is uninvestable. You have been beating the offshore drum, but tentatively saying, hang on, South Africa is looking better, as you've just reminded us. Are you of the opinion that the country is uninvestable, or still uninvestable, as Rob Hersov suggests?
No, I don't think so. You remember the old saying in investment markets, I don't know who said it, it'll come to me now, but he said, if the facts change, you change your mind. You cannot have a rigid investment approach in the face of glaring facts that have changed everything. And things have changed in South Africa. And I know Cyril Ramaphosa is taking credit and saying it's the ANC. But first of all, I think one must commend the South African private sector for how they've managed to survive and prosper in the face of absolute draconian policy decisions from government, a very hostile political environment. Our guys have just knuckled down, and they've just got on with their business, which is quite remarkable. if you drive around in South Africa and you see what the ShopRites are doing and the Checkers and the Mediclinics, they are investing in the face of a very hostile political environment. That environment is changing, and I think the ANC realize they cannot carry on thumbing their noses at the private sector. And these are the guys who've got to pay the bills and pay the taxes. So there has been a turnaround. Secondly, confidence is coming back into the people I speak to. People are actually coming back from overseas to South Africa. It hasn't fallen across the abyss. So you cannot deny these things. And any person, whether you're a fund manager or advisor, you have to say things have changed, and therefore our strategy is changing. And our strategy at Brentis has changed a long time ago. We've been very selectively increasing our allocation to local equities, and they've done extremely well. But our offshore stuff has done nobody's actually lost in this race. It's actually been quite remarkable. Both offshore has done extremely well, and local has done extremely well. So the final point is South Africans are starting to repair their balance sheets, which have been badly damaged. And the property market outside of the Western Cape is now starting to come alive as well because of prospects of lower interest rates. And of course, I think residential property in the north of the country is extremely cheap when you compare it to the Western Cape. And if the DA, Helen Zille, manages to take control of Johannesburg, that will be very positive because it is a big asset. And the last point I want to make is I think this World Bank loan that was given to South African municipalities last week, very much under the radar, but that is a massive amount of money that is going to be deployed under the strict supervision of the World Bank to fix up our cities. So for the first time, I've been telling people who care to listen, property in Joburg is very, very cheap right now. If you want to speculate, I'd be buying in Johannesburg, in places like Dainfern or Belleau or those, where rand for rand, the square meter property is half the price, if not more, than in Cape Town. And value just comes into play at some point.
It's a very interesting point that on the World Bank loan, I did ask Duncan Peterson, the DG of Finance, about that, and he said there is a requirement that the metros follow a certain process. So they can't just get the money; they have to follow the process. And only 6, he said, of the 8 are actually qualifying. So I don't know if Joburg's one of those 6. I've asked Treasury to tell me, and we'll have to wait and see. But if Joburg isn't one of those 6, then I think you need to hold your horses there. Something else that's quite interesting is that they had debt relief for municipalities from Eskom. And 70, he said, more than 70 municipalities out of the country, outside the metros, applied. Only 24 have actually been granted it because only 24 qualified under the criteria. Isn't that interesting? But I think the most important part of all of this is that the governance is coming right. You know, in the past, if you were a metro and there was a World Bank loan, well, you got the money and you gave it to your pals. Now you have to pass certain criteria. And that, I suppose, plays to your thesis, which is things really are starting to get better where it matters.
They are, but that's no guarantee of what's going to happen in the future, because there are 2 things at play in any investment. The one thing is the fundamentals, which we've been talking about, that we think are getting better in South Africa. That's one thing. And that 4 years ago, we thought the fundamentals were very poor, but now we think they're getting better. So the fundamentals are one thing, but the second aspect of any investment is how is the market pricing those fundamentals. So 4 years ago, the fundamentals were bad, but the market was pricing them even worse. So you were getting paid to take the risk in South Africa at that time. Today, the fundamentals are improving and the assets are still cheap. So now there's even extra sauce or extra gravy on the pie here, because the fundamentals are getting better, but the pricing has not improved dramatically. It's gone up a bit, but not in line with fundamentals. So it's even better as an investment prospect now than it was 4 years ago. So that's one thing I'd like to say. And the second thing is, when people call something uninvestable on the one hand or euphoric on the other hand, you either get attracted to it or run away from it. So when people like Rob Heystek say something is uninvestable, that pricks up my ears, and I start looking at it possibly for investment opportunities, because he is expressing the consensus view. Just like 2-3 years ago, people were saying China is uninvestable. That was the consensus view, and look what's happened to China since then. I mean, those stocks are up a lot. So when the consensus says something is uninvestable, that is when you should start looking at things. And conversely, when the consensus becomes euphoric, that is when you should start questioning things, because even though the fundamentals are looking good at that time, when things are euphoric, the pricing is probably way in excess of the fundamentals. And so I would just like to point out that when the consensus, and Rob Heystek, I think, exemplifies the consensus, when the consensus says something is uninvestable, I think you should have a look.
That's a very interesting aspect of investing that many people forget. It's almost like, let's go with the crowd because the crowd is the wisdom of crowds. But actually, if you long-term want to flourish, you need to watch the crowd as being something that is wrong. So I guess the big two questions on that: neither of you went into Bitcoin or into cryptocurrency 4 years ago. Was that your biggest mistake? And if you could redo the portfolios today, what would be the one thing? How would you change it so you could win the portfolio? I guess, Magnus, from your side, would you, given what Piet said, would you now take it from offshore, put it back into onshore, and play him at his own game?
No, the one regret I have is that I got into the gold share rally too late. I saw this starting to develop, and it was developing at such a rate. The speed was just tremendous. Whether you invested gold shares in South Africa or Shell, the same returns. I just sat and watched this, and my natural skepticism kept on kicking in, and I was absolutely wrong. By the time I'd got in, it was in the middle of the rally. I left 50% on the table. Technology, spot on. I'm happy with that. That's still doing extremely well. Sean Pichet is still there. And I've got my exposure to Japan in the portfolio. It's a question of timing. So one regret, not Bitcoin, it would be gold shares. You remember when you and I were growing up as journalists, if it was just a gold market, gold shares, we had 35 listed gold companies, we had gold mining companies, everybody was a gold analyst. And that's just gone in South Africa. We don't discuss the gold price anymore. We don't discuss the gold shares or the grades or the production quarterlies. It's all gone and dusted, and I missed that trick, and which I regretted. Got other things right, but I missed the gold.
Yeah, Peter Major says if they can just get the governance correct there on the mining side, and that is awful. It's absolutely appalling, the governance that the mining industries had to suffer under. Then we would see a massive boom there. He says there's more gold in the ground in South Africa than anywhere else in the world. In fact, more gold in the ground in South Africa than the rest of the world combined. But we've got such bad governance that we can't mine it. Anyway, Piet, from your perspective?
Look, I mean, investing, if you're going to have regrets about things, you will live a regretful life, because there's always stuff that you've missed out on, stuff that goes up that you haven't bought, stuff you bought that goes down. That's always happening. So I'm very satisfied with what I did 4 years ago by buying units in the value fund. Unfortunately, the regulatory environment does not allow local unit trust or CISs, whatever you want to call them, collective investment schemes, to buy or invest in Bitcoin. If the regulator had allowed that, the fund would have bought into Bitcoin, because personally, I have been buying Bitcoin for the last 9 years. But the regulator doesn't allow us to invest it in collective investment schemes. So that wasn't by choice. But I have no regrets. I mean, I think the fund has done fine. We've missed out on the gold boom. There's stuff you miss out on all the time. If you look at the returns, it's well in excess of inflation, and that is the best any investor could hope for. So I'm quite satisfied.
So if you could invest in Bitcoin now at $90,000, given that it's come below $100,000 for the first time in a few months anyway, would you be?
I'm buying every month. For the price of a good meal, I'm buying Bitcoin. I've been doing so for almost 10 years, every month. Whether it's up or down, I don't.
And I know you're not making this up, because you told us to do that, and we put 2% of the BizNews portfolio into Bitcoin, and it became 10%. So it's been a massive outperformer. So thank you, Piet Viljoen. Many people in the tribe are appreciative of the role that you played there. On top of which, we also, on your advice, invested in South African equities and in our shift portfolio, and that has also performed really well. So now when we look ahead, what exactly are you going to do that's going to win you this competition? The one thing, if you could do anything, is there anything? Or if not, why do you think you're going to win it?
I'm staying the course. I'm keeping the investment in the value fund. The value fund is predominantly exposed to South African businesses, and they're doing fine. So I'm staying the course. And I think that's the key to any successful investment, is to stay the course, and not chop and change. Importantly, anything can happen over the next year. I don't know what's going to happen. I'm not going to try and forecast what's going to happen, because I think that's a mud's game. I'm staying the course with fundamentally undervalued, good quality businesses with a wind that's changed from a headwind to somewhat of a tailwind. So I think my sales are set fair.
So your portfolio, as it now sits, is a better proposition than it was 4 years ago?
Yes.
Magnus?
I've got to stick to the offshore theme. I think that's what people want in South Africa. I made a point a while ago in my article. A lot of people want their assets to be offshore for various reasons. Whether the kids are immigrating or they want to immigrate or retire, they want their assets to be offshore. And that's what people are giving them. And they now have a wide range of funds to choose from. And as I said, there have been funds that have done exceptionally well, beating both me and Piet by a very, very large margin. Unfortunately, a lot of our clients are stuck in the... Our job is to now... the final point I would like to make, there's no change in my strategy. South Africa is now... The South African investor is now a global investor. He's not going to change and bring his money all back because the rand is suddenly strong. That's not going to happen. We have not had one request from clients saying, "Oh, should I not bring my money back?" They might bring it back because they're buying some other assets like property. South Africans have become global. Their money is diversified around the world. They've been educated. That's the sophisticated way to manage your money. Their local investments in the form of retirement annuities, pension funds, and RAs have done extremely well. They've repaired 10 years of bad growth. They're very happy about that. But they're not changing the strategy just because of a short-term improvement, because there are still many significant risks, mostly lying in the political field, which you cannot ignore. They're still there, as Peter's pointed out. Anything can happen in the field of politics. Ramaphosa can be kicked out. There can be a break. So the political risk will prevent people from bringing their money back, because they can get similar returns, if not better returns, by just simply keeping their money offshore. And one final point, what very people don't realize, you can take your money across and put it in dollars. And if the SA market is doing well, you can buy an ETF offshore that invested back in South Africa. And that's been a fantastic strategy. So your money is sitting offshore, but you're invested in South Africa, but you have the control to move it out very quickly if you decide to do so. And that's something that very few people have picked up. So I can protect my clients by buying JSE on an ETF listed in London, and it's done extremely well.
And Piet, final word on your side. If you are living in South Africa and intend to live in South Africa, shouldn't you really be investing in rands, because that's what you're going to be spending?
I think one should always, at all times, have a diversified portfolio. And I think the points Magnus make are 100% valid. South Africans are global investors. My argument has always been and remains, whatever your neutral position is for South African assets, whether that's 0 or 5 or 10%, you should have more than your neutral position. That's my argument. And I think that makes sense. So, yes, by all means, diversify offshore, but don't be blind to the opportunities that are right here in front of your face. But those opportunities do come with risks, and those risks might manifest in a negative way going forward. So don't have all your eggs in this basket either. I think that's quite something.
Just to come back to your point, Piet, you made about Alec, you made that point. Where are you going to get your income from? What is your income requirements, and where are you going to provide that income? And that's the starting point of any long-term investment strategy. And once you work that out, you will have the answer to how much you should have offshore for your long-term capital growth. So that's a strategy we've been following for a very long time. So once you've taken care of that, and our interest rates have been extremely high, and the returns on the funds have been fantastic, 10%, 11%. That's been a fantastic place for people looking for a very good return. I mean, Alec, you might be surprised. I bought some more property in South Africa. People think I'm anti-SA, and I bought more property last week in South Africa in the little town of Paarl. It's a boom town. I've been saying this for 15 years. I've been buying property every time I have some spare cash. I've been buying more property in South Africa, and but for the first time, I'm now looking north instead of south for some bargains that are coming up.
So if I can just say, in terms of investing in South Africa, Magnus made the point of investing in South African ETF with your offshore money. I do think there's a slight nuance there. If you buy the SA ETF, you're basically buying offshore businesses, because the companies that dominate that ETF are the British American Tobaccos, the AB InBevs, the Richemonts, the gold companies of the world. You are not really investing in SA Inc. if you're buying that SA ETF with your offshore money. So one just has to be aware, to get exposure to SA Inc., you have to look at specific funds that invest into that part of the market. Most of the big funds invest relative to the index, and the stuff that dominates the index is all offshore companies. You know, it's not only retail investors that have taken their money offshore. SA corporates have internationalized as well. So the big companies are all international companies. To get exposed to SA Inc., you need to think very clearly on how to do that. You're not going to get it through the index.
Okay, good point. Just one final point that I'd like to ask you both, because it is something that occupies many minds. We've seen that artificial intelligence has been the story that's dominated all the investors' occupation over the past many months. And now Warren Buffett, the father of value investing, the Oracle of Omaha, his company has bought Alphabet, Google. That for the first time ever. What is going on there? Is Buffett seeing something that the other investors of his ilk are terribly nervous about? Is he seeing that there's an opportunity there, that in the same way as he invested in Apple before its strong run? Why would he be doing that? Is that sending any kind of a signal? How do you interpret it, Magnus?
It is sending a signal. And, Warren Buffett is such a dominant force in the investment world. If he makes a big move like this, the market is going to take notice, and investors will take notice. And it's very significant that he's made this big purchase at the same point that many other commentators were calling the top of the market, and Barry was shorting the market, and various newsletters are coming out. Now you sell everything. And now he's buying, going up. I haven't worked out why, but I think it's fantastic, because I personally and many of my clients are very well exposed to Alphabet. They've done extremely well. And on the basis of that, I would be buying more. So I think it's significant. You point out when he bought Apple, suddenly that share just kept on motoring, and people have done extremely well following Buffett on an individual call like this.
Piet?
I think it's dangerous to take one stock pick from a renowned investor and say, well, this has got to do very well because this investor is buying it. I think Buffett also bought Occidental Petroleum 3 years ago. That has been not a good investment. So you can always cherry pick. You can always cherry pick this one or that one. That's good. That's bad. Again, I think the jury's out. I think there's a massive capex. There's a massive capex cycle taking place in America. I think it leads to a misallocation of capital over time. Whether that's tomorrow or next year or in 5 years' time, I don't know the answer to that. But I think it does lead to poor returns on capital over time when you have a capex boom like this. It does lead eventually to fantastic growth once this massive capacity that is being built is taken up. But I think there's, as with the internet in 2000s and mines in the 2007s, there's a long lead time between capex going down and the productivity coming out the other side. So I have reservations about that. I think the more sensible approach, and it's possibly one that Buffett has taken, is to invest in where there's a choke point in the system, and the clear choke point for the whole AI data center system is power, energy. Because you can get chips within 6 months, a year, and build a data center within 2 years, but you can't build the energy generating capacity in 6 months or a year or 2 years. And these things are energy hungry and demand a lot of energy. I mean, it's not an accident that they quote the size of a data center in megawatts of energy. That's how they denominate the size of a data center. So I think that's the choke point in this whole AI capex build out, and that is how how I am investing in it. Because I don't know how these data centers and how AI plays out. I don't know who's going to make the money. Is it pets.com or Amazon? I don't know.
But Piet, Warren Buffett has been following Google, Alphabet, for years. For years, he and Charlie Munger were saying at the AGM that they love this company and that it's got a bulletproof model. So it's not like they've just tumbled onto it now. And with Buffett, he researches to the nth degree. In a case like this, would it not at least push you towards looking again at the annual report?
At Google's annual report. Yeah, look, I look at that all the time. But for me, there's too many unknowns about the possible outcomes in the future. And given the valuation levels, again, it's this whole thing with fundamentals versus the pricing. I think things have to work out well for you to make money on this investment. And if they work out well, you will make money on the investment. But, that's a very narrow gap that you have to negotiate. So I'd rather stand back and say, where are the odds on my side? And to my view, the odds are on your side in the energy sector, which is massively underrepresented in indices, which is trading on low multiples, and which there will be clearly increasing demand for its product in the future, because they are building out these data centers. It is happening. What the returns on them are going to be, I don't know, but they will want energy. So I can see the demand for energy going up, and I can see the returns to energy companies going up.
So who knows? Maybe Eskom one day will be not the white elephant that we see it as, but actually a massive national. Piet Viljoen, the founder of ReCM, whose Merchant West Value Fund has been outperforming in this competition so far. Magnus Heystek, the founder of Brenthurst Wealth, who has been, showing that there are lots of lessons that us who don't manage money for a living can learn from. But there's still a year to go in this competition. There's not that big a gap, and anything could happen. Gents, thanks for being good sports and participating in this, and for making money for our tribe member who can't be too unhappy with the fact that his million rand is now worth 1.3 million rand, and hopefully by the end of the competition, significantly more than that. I'm Alec Hogg from biznews.com.